right? So in terms of creating a game plan, this is quite literally what we do as day traders every single day. This is how we approach our business, is creating a game plan heading into the market. The first thing that we're always considering is time. We get to the economic calendar and look at the red folders. Since there was no red folders, the only important time today was New York Open, right? 9:30 a.m. So those are the important times to understand. Then is bias or withdrawal and liquidity. In my opinion, those two things mean the same exact thing, right? Whatever you think price is reaching for is a bias. Whatever price is reaching for is a draw on liquidity. In my opinion, those two things mean the same thing. For myself, I get to the daily chart. I look at swing highs, swing lows, and FEGs. That's how I create a bias. Currently, with ES is currently dealing with a bullish FEG, right? So this literally explains the reason why I'm pointing to that long position on the lower time frame. Price is potentially finding support from the bullish FEG. When price is located at a bullish FEG on the daily chart, I have a bullish bias. So I'm looking for a bullish position for this reasoning right here, looking to see if this area provides any support for price. Right, so now in terms of our game plan, we know the important times of the day. Now we have an idea, right? A bullish bias. On top of the bullish bias, you can get down to the hourly chart, right? So on the hourly chart, that's where I'm looking at market structure, and I'm looking for a clear draw on liquidity. You can see these failure swings right here, and that's what I was pointing to on the lower time frame as relative equal highs. Once again, everybody that's been working with me, let me just check to see if this is giving an entry. Not yet, but we do got to pay attention here. See if this gives an entry here. This is the location that I'm looking to enter here. So we'll see if it pulls back to that location. Let's leave that on the chart so that we're aware during our top-down analysis. For all the individuals that have been working with me, they know that I want to use equal highs or equal lows as a draw on liquidity. They know that the right side of the equal highs or the equal lows should be the failure swing. Right, so you can see it here. Here's the swing high. To the right of it has a failure swing. That's why I'm looking at this as equal highs or a draw on liquidity. Next thing to understand is that when I have a bullish bias, I'm looking to execute from a higher time frame point of interest. The higher time frame points of interest are the same thing as the bias. I'm looking at swing highs, swing lows, and FEGs. Okay, so since I'm bullish today, I would want to look for long positions from higher time frame points of interest. You can see the bullish FEG here. So we may potentially be bouncing from a bullish FEG. Therefore, we have a bias. We went to the daily chart. We went to the hourly chart, and we have a higher time frame point of interest and a draw on liquidity. That's when you go to the 5-minute chart looking for your entry function, right? And that's why I pointed it out here. You have a bullish unicorn right here. So we're waiting to see if it provides a retracement to enter a long, targeting 2R. So entry is at the beginning of the breaker, stop goes at the low, targeting 2R. And 2R nicely lines up with our draw on liquidity. So everything here, in my opinion, aligns for taking risk, right? It fits my game plan. More importantly, I created a game plan, and now I understand what I'm executing. So during the time of the market being open, it's a matter of executing that game plan with strictly defined risk management. And I can strictly define my risk management because of the model I use. I know where I enter. I know where the stop loss is. So I know what invalidation would be. Okay. Let's see if we get support from the breaker here. This is the position that I was looking for. Let's see if we can get support from the breaker and then reach for 2R. So now that it is retested the entry function, we will now look to target this here. Okay, so risk is to be accepted before any risk is taken. Once again, a quick disclaimer. This is not a signal service. I am here to document my own journey. You are to take full responsibility of your own risk. I will not take any responsibility for it. This is not a signal service. I'm simply documenting my own journey and sharing it with everybody else publicly here. So now that you got a top-down analysis, now that we got a retrace to the entry function, now that risk has been accepted, now it's a moment in time to allow the probabilities to play out. So if you are capable of accepting the risk, then you just got an opportunity to enter here. If you accepted the risk, now it's the moment in time to allow the probabilities to play out. Okay, so let's see what happens. Let's see.